Hello everyone. Welcome again to another video. Usually we make videos for the coming week, but I've decided to make an update for how the week is going. It's currently Wednesday, 5th of March. So yeah, as you can see by the thumbnail, this is just gonna be a rundown video of the trade I've taken for this for the first week of March. So as you can see by the thumbnail, I was able to make around 4%, or rather 4 to 1 on a single trade, and I was able to use it to get funded. So let's start from the monthly time frame. There's something I would also like to share, because this is another aspect of how I see my trading going, how I see it, how I view a pair before I take action. And USDCHF, USDCHF, it's a dollar based pair, and these pairs are very, very, very structured. They are very, very structured. If you were to go to Euro CHF, it wouldn't be as structured as it is right now. you know so now listen, there are certain types of market. There are three types of market here. There's a trending market, the one that's either going up or going down easily. And there's a consolidation, or rather a mid-range trend. If you go on Euro USD, GBP USD is having a mid-range trend, a mid-range mid-term reversal. And there is a ranging market. A ranging market is simple. There are ways to trade these things. There are ways to trade these things. Trading is not just it's not just a straight line, but there are curves, there are edges. So this is a ranging market, like this, up, down. A ranging market, up, down. It's in a range. It's within a zone. It's refusing to go above or go below. So there are ways to trade this market. So you can see, if you see, this is exactly as this one is right here. But if you see this one, this consolidation right here, this range, it's not the same as this one, right? Because this one is trending. It's trending all the way to the downside. No hookups, no, nothing is slowing it down. So you can see right here. This is a ranging market. You see what I'm saying to you? This is a ranging market now. Moving forward. Now, all I have to do on the monthly time frame is, as per usual, I look for the trend. Now, because there are two types of setup: A plus setups and B plus setups. You know, I used to say to myself, I would never, take a B plus setup. So nothing will make me look for a setup that is not as perfect as I would want it to be. But then, you need to understand that, the market will not just give you everything you want. Sometimes you have to, bend to the rules of the market. So in this case, I was able to view that, okay, the monthly time frame is bullish. I was able to view that, lower low, lower high, lower low, higher high. We closed above this last low, right? So we became bullish. Higher low, because we are right above this one, right? So higher low, and now we haven't put in a higher high yet. So it's safe to say that we are still bullish, right? And it's safe to say that we might come back into this area and put in, a double bottom to give us a push to the upside, right? So we are bullish on the monthly time frame. We've established that, but we're in the range. We are bullish on the monthly time frame, but what? We are in the range. Now we go to the weekly time frame. Now on the weekly time frame, these lines, that is where this is the where I draw these lines on the weekly time frame. I don't draw it on the monthly time frame. I draw them on the weekly time frame. Now on the weekly time frame, we could see that it is identical. The thing about the market is this, about trading is this: it will always do what it has done in the past. I say again, it will always do what it has done in the past. The market does not reinvent itself. It will print out the same thing it has printed out before. It will do the same thing that it has done before. So you need to understand that if you see it in the past, it's more than likely going to happen in the future. How do I mean? If you look right here, we came up, we came down, right? Higher, 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 low, right? We came and put in a double top right here. This, if you want to understand what double top means, you can look at the last video, chart pattern. Now, if you see, it was coming down, it came down, use it, and it came down, right? So now watch, we came up, we came down, right? The same thing that happened here, right? On the same price. And guess what? We came back, we came into that place, a double top. Now what do you think is gonna happen? It's gonna reinvent, it's gonna do the same thing it has done in the past, right? It's gonna come down, touch it, and then drop all the way to the downside, all the way to the downside. Now, on the weekly time frame, we've seen that, okay, we're bearish. You see what I'm saying to you? We're bearish now. How do I know we're bearish? There are two ways, or rather, there are three ways for me to be able to, you know, get into a trend, get into a trade. So first thing is the break of trend line, you know, the break of what a counter trend line and a chart pattern. Now, if I see if I don't see a chart pattern here, I would expect the market to come and break this level before I get interested, because it has to give me, it has to fulfill two out of three of my entry strategy. So on the weekly time frame, we can see that we were bearish, lower low, lower high, lower low, lower high, lower low, putting the double bottom right here. We became bullish, higher high, higher low, then higher high. Now you need to understand that this double top did not shift the structure. I come again, this double top right here did not shift the structure, unlike this double top, this double bottom right here. You see how it came down, came up, then it came a lot, a lot further down, and then it shifted structure. But if you look here, this one is the higher high. We never shifted structure, but we gave a chart pattern. You see what I'm saying to you? We gave what, a chart pattern, and that was enough evidence for me to know, okay, we are going to the downside. Well, we're going to the downside. If I look at the past, a double top at the same place and a double top again, it's a no-brainer. Come on now, it's a no-brainer. So what did I do? I executed immediately. Now I went to the daily time frame. Now on the daily time frame, this is where I plot out my areas of interest. This is where I look for areas where I would be entering I would be executing my trades from. Now on the daily time frame, I could see we're already bearish. Now these lines have been here since even before the market came all the way here. It has been here for a long time. You know. Now on the daily time frame, we're bearish. Higher high, higher low, higher high, lower low. Now we are bearish. The structure has was shifted. Now all I did was to go on the 4 hour to wait for a retest. All I did was to go to the 4 hour to wait for the market to break here, to wait for the market to do this, break and retest. Now, when the market was doing all of this, I wasn't interested because I had more sufficient pairs to trade. I had USD CHF, I had USD CAD, so I wasn't really interested. So then coming this week, if you go to if you view last week's the our plan for this week, it was Euro USD and USD CAD, right? I think so. Yeah, Euro USD and USD CAD. Now we took the USD CAD trade, but we didn't quite take the Euro USD trade. So I was expecting Euro USD to fulfill these things, but you need to understand that we're not wrong until we take a loss. Now the fact that the our projection for the market did not go as planned does not mean, oh, we're wrong in the direction. No, if we had had an impulse entry into the market and then we took a loss, then we were wrong. But for now, we are right, because why? Not just only do we need a projection in the market, not just only do we need to know where the market is going, but we need to be able to execute it rightly. So what I did here was, this was where I saw the market going on Monday morning. So basically on Monday I saw the market around here. I opened the USD CHF and I saw that okay, USD CHF is back into my area of interest. It's back into my area of support. If you look right here, the same area too. So all I did was, on the 4 hour I drew my counter trend line like so, and I went on the 1 hour and I saw that on the 1 hour we're already giving what, heads and shoulders. Now you need to understand these things. These things, they tell a story. At least to me, they tell a story. It's not just enough, but they tell a story. So I could see head and shoulder right here. Higher high, higher low, higher high. We broke structure. We came and put in the shoulder, but we hadn't broken the trend line, right? Now in this case, we do not even need the trend line, because why? We've already broken structure right here, and we've also what, given the chart pattern, which is the head and shoulders. The head and shoulders is the chart pattern that tells you I'm about to move. I'm about to make a U-turn, as we said in the chart pattern video. I'm about to make a U-turn. This is what we saw. You know, when I saw this chart pattern right here, the exact thing here. When I saw it here, I was like, okay, we're about to make a U-turn. And then when the time I viewed the market, we were right here, and then I executed right here. My stop losses were above here. You know, my stop loss, I executed right here. My stop losses were above here, and then my take profit was here. That's all I needed. All I needed was my take profit to be right here. See, immediately the market touched my take profit, it went all the way up, signed to reverse. That's how precise these areas are. That's how precise these areas of interest are. They're not just there for fancy, but they are there to give us the exact time where we should get out and where we should get in. So my next plan for USD CHF is this. I need a break. See, rinse and repeat, rinse and repeat. I need it to I need USD CHF to do this. Break, close right below underneath, and then come up for a retest to tell me the reason why we look for retest is because you know it tells us that okay, this level that you have in mind is strong enough to take me to the downside. So if the market just breaks and then I execute, I'm at risk because I do not know for real, 100% if this level right here could take me to the downside. That is why we wait for a retest. Now once it retests and then it starts to go to the downside and I get the bounce, then I'm like, okay, now I know it's for real. Because why? See retest, it break rather, it came and retested, and then we're having a bounce, we're having a U-turn, and then I was like, okay, for real, it's happening. Then I executed the trade. So I would expect the market to give me this exact same consolidation right here beneath, and then the bounce, rinse and repeat, the exact same thing. That's what you have to do in trading. You do not need multiple trading plans. You just need one trading plan and to execute on that one trading plan. And that's how you become successful. That's how you rack up profits for yourself. Because most people would use a trend line today, tomorrow they use an indicator, tomorrow they use an EMA. No, if you're using a trend line, use a trend line. If you're using a break of structure, use a break of structure. You just have to perfect that one thing that works for you. Like I say, you just have to perfect that one thing that works for you. you know the way my mentor may trade, may enter a trade or execute a trade may not be the way I like to execute a trade. That's what I'm saying to you. So what do I do? I make sure that whatever I'm doing, it works for me and myself alone. What I'm doing right now may not work for you. It's something to, so you have to look for what works for you. That's why you have to spend time with yourself. That's why you have to be isolated. That's why you have to be in boredom to be able to understand yourself. That's how it works. But now I'm deviating into more psychological things of life. But anyway, let's talk more about trading. So my next plan will be, as I said, break, retest, and then we fall all the way to the downside, all the way to the downside. Now you need to understand that this is not a trending market, rather it is a ranging market. So there are ways to trade it. If you're going to trade it, you reduce your stock, you reduce your risk. So my risk is already reduced already, so I don't need to reduce it. My risk is like 1%, 0.5%. So it's basically low. It's enough. So, but if you're risking like 3% to trade, you could take your risk down to like maybe 1.5%. Because this is a ranging market, anything can happen. I do not. That's why I said it's a B plus setup. It is a B plus setup. So I urge you lot to subscribe. I urge you lot to leave comments and like the video. See you at the end of the week. Ciao, ciao.